We are about to see one of the biggest changes in the financial system we've ever seen before. Today, we're going to be breaking all that down, and it involves crypto, digital assets, tokenized securities. You don't want to miss it. My name is Paul Barron. Welcome back into Tech Path. Let's start by thanking our sponsor, and that is iTrust Capital. Looking for long-term holding of your crypto assets, and you want to do it in an IRA, this is where you can start. Just go over to the iTrust Capital website, itrustcapital.com, and you can start getting into your own crypto assets and holding it in your IRA. You can hold gold, silver, as well as a ton of altcoins. No monthly fees. All you do is pay fees based on your own internal trade management. Easy to do, easy to set up. All you have to do is jump into the link down below and get a $100 funding reward to get started. All right, let's go into a couple of points here I want to hit on. And that, of course, is the legislative framework that seems to continuously brew here. Let me kind of zoom in on this one right here. June 5th, that's this week, we have the next generation infrastructure, how tokenized of real world assets will facilitate efficient markets. Now, we've got a lot to talk about here because this is getting into Carlos Domingo. He's been on our show before. This is the co-founder and CEO of Securitize, running the BUIDL token tied to Blackrock. And what they're going to be talking about is additional legislation that could be brewing up as well. And part of this is going to be the development of tokenized securities and derivatives products. So that's another one. In addition to FIT21, so think about FIT21, but for tokenized assets. Then they're also going to be talking about this new HR 8464, which is the Tokenization Report Act of 2024. Whew. Also, last up, before I go to the next tab over here, is Professor Hillary Allen. Do you guys remember this name? This is the professor of law, American University, Washington College of Law. Okay? Remember that name because the last time we featured her was in this video right here. And that was all the way back a year ago when Filecoin basically said, we know you're anti-crypto, here's all the problems with your statement, and they basically just dismantled our arguments left and right. Well, that's not the end of it. She's going to be coming back to Capitol Hill to again go directly against crypto. And of course, she's got to be on Senator Warren's position. Here she is right here over on X, pessimistic financial futurist, meaning I don't believe in crypto. It's really what it should have said. And I want to play a clip from a podcast that goes in further. This is a very interesting podcast, so bear with me on this. Listen to what she has to say right here. This is a very important piece because this is her positioning on crypto. Take a look.
What kind of regulations do you think should be put in place?
I mean, the first thing I would like to see is sort of a blanket ban on any banks or other sort of institutional financial players getting into the crypto space. There is nothing in crypto that really makes it a better solution for people who need cheaper, faster payments.
So you don't see it as opening up financial opportunities to people who at this point, don't really have access to the traditional financial system?
No, because to get a loan in crypto, you have to already have crypto and stake that crypto for the loan. So that's not going to bring new financial services to people who don't already have capital. If you need to be able to make payments quickly, you don't want to have to go through exchanges who are going to charge you significantly to convert your fiat into crypto and then back again. And not even that, there's not even any productive capacity. Like if you buy a share in a corporation, they make something or they build something or they sell something, there is plant, there are employees, et cetera. And if that corporation were to fail, then you could liquidate everything and, you might not get much for your share, but there's something there. Whereas most crypto assets have nothing behind them. And so their value is entirely dependent on someone else being willing to buy that asset from you.
Okay, well, there's a lot to unpack there, of course. First of all, almost every point she was hitting on, the loan origination that you've got to carry an asset to get a loan upon it. That's called banking law. I mean, no bank is going to give you a loan without a securitized asset behind it, whether it's real estate, car, doesn't matter. If it's Bitcoin, okay, that's an asset. Yes, so that's the first fallacy. The other thing around speed of transaction and openness in terms of people who don't have access to traditional banking system, that's all over the world. We already see that. There are emerging countries, there are a problem and is a problem right now in terms of speed of transaction. We already see this every day here, even in the American banking system, one of the most modern banking and financial systems on the planet that still have ACH slowdowns, which take from one bank to the next bank a day or two in some cases. And remember, don't forget, they don't work on the weekends. So all of those, of course, slow the entire financial system down, which creates this whole system around business called float, which many businesses operate on. So that's another big factor. The other thing about the idea that you couldn't send it crypto from one wallet to another without the use of a middleman just simply put her in a position that she absolutely does not know what she's talking about when it comes to crypto. So all that being said, let's take a look at where real world assets are actually going. We'll go right up here to the top one, and that gold one is right there at the top. If you can't see that, let me kind of zoom in on that for you guys just a little bit. That's BITL. Well, that is Securitized. Securitized is going to be at this hearing, getting ready to go head to head with our professor there, and I think that will be an interesting conversation. What are we going to see also coming soon? Real estate, commodities, stablecoins, all of that starting to line up here in real world assets. All right, so let me go to another chart real quick. This is kind of where we are right now. 2024, you can kind of see about 1.5. And look at the tokenized asset potential. It differs across a little bit of countries due to the variation in their maturity of regulations and the size of the asset classes. But the key here is look by 2030, the growth we're going to see around tokenized securities. All of this and tokenized assets, all of this in a very high growth rate. I want to go to a couple of clips for you guys to kind of explain a little bit of where this is going. This one is a reminder around Larry Fink and what he predicted on the ETH ETF. Take a look.
Let me be clear. I think ETFs are step one in the technological revolution in the financial markets. Step two is going to be the tokenization of every financial asset.
Do you think that Gary, and we'll talk to him later, Gary,
like Ethereum,
will have to approve an Ethereum?
Yeah.
Or do you think that all these things have to go to court first?
I couldn't respond to that. I see value in having an Ethereum ETF. As I said, these are just stepping stones towards tokenization. We have the technology to tokenize today. If you want to talk about, think about this. If you had a tokenized security.
Jamie Dimon disagrees with you on that, but.
Does he, though? Jamie Dimon, though, goes into this a little bit more. Remember, he has been an antagonist of crypto for quite some time, but there's a little bit of a plot twist. Take a look.
I've always been deeply opposed to crypto. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance. If I was the government, I'd close it down.
Building and managing portfolios for clients is a $5.5 trillion business. Enter tokenization and smart contracts. Through Crescendo, a JP Morgan next-generation portfolio management proof of concept, portfolio managers and investors can access traditional and alternative assets. Take Ollie, an investor, and Kathy, his portfolio manager. Ollie wants his investments to reflect his risk appetite and his ESG values. With Crescendo, Kathy can quickly build an ESG-centric model defining sustainability-focused strategies and desired risk and return characteristics. Ollie reviews the details, including asset allocations to the target funds, as well as the projected outcomes. When he's ready to invest, he transfers his dollar deposit tokens to Kathy, who instantly receives them. The trade execution process automatically kicks off, ensuring Ollie's investment dollars are allocated to the underlying assets of the model, using the exact proportions Kathy set. Crescendo can even enable investment in funds that are issued through existing systems and on different blockchain networks, freeing Kathy from managing downstream complexities. Should Kathy decide to amend existing fund allocations based on insights from her AI assistant, she can quickly make those changes and update hundreds of portfolios at once, across blockchains and funds, in just a few clicks.
This is a lot of work that JP Morgan has been doing. If you guys look at that video right there, you'll probably notice a handful of crypto projects that are right there center stage. One, of course, is Avalanche, right in the middle of that with Wisdom Tree. And then also you look at Apollo coming in right there under Providence blockchain, which I'll show you guys in a second, why that's important. All right, let me jump back over here to the hearing that's coming up, because there's another name here you need to pay attention to, and that's Robert Morgan, Chief Executive Officer, USDF. All right. What is USDF Consortium? We'll just go over and jump into their website. USDF is the banking industry's answer to the need for a digital dollar. Let's go down further. You can kind of start to see the members there. You've got Amaranth there, Connect One, a lot of the mid-sized banks, First Bank, et cetera, New York Community Bank. So with this, you look at, all right, where and what blockchains are involved here. Let's go further into the page. What blockchain will USDF operate on? Right there, Providence blockchain. Remember that name, Providence blockchain, tied to JP Morgan, tied to Avalanche. Coming back in, there's Providence blockchain right there, one connected financial services ecosystem. Again, going back to that JP Morgan video, it starts to break down all these components. So it starts to lay in a very intricate but yet somewhat very pointed effort in a lot of the major names that we recognize on Wall Street every day, BlackRock, JP Morgan, etc. Tokenized assets are now here. They are for sure in play. Here is why all of this is being taken so seriously right now, and that is stablecoins under MiCA. Final countdown application on stablecoins is now started. This happens on June 30th. So right there we are, less than 30 days away. We will have stablecoins in the European Union, and MiCA will be in the guidance factor within that. Here's the announcement from Jeremy Allaire that is very interesting because this starts to paint a picture for what stablecoins are going to be involved. Now, I want to look at a couple things. Major changes coming to the European digital asset market, June 30th. Take a look at this announcement. Now, I'm going to bump to this announcement and show you guys something that is kind of an interesting statement. And I want to highlight right here, spot trading pairs with unauthorized stablecoins will remain available until further notice. We know what unauthorized stablecoins that is. That's now known as Tether. So how does this play out? Because there are a lot of people, all right, well, this is happening. Is Tether going to get delisted? Is Tether going to be a stablecoin of use anymore? How is that going to play out? A couple of points happening with Binance right here. Here's Richard Tang, who is the CEO of Binance, playing into this. I just want to take a moment, address the bigger questions about raised our strategy for the upcoming MiCA stablecoin rules. Please be assured that Binance won't delist any unauthorized stablecoins on spot, but will limit their availability for EEA users. So this itself is Binance prepping to get away from this. So man, this gets really intriguing as it starts to play out in the United States, especially as we start to see a fast track, most likely, of a stablecoin bill. I want to play a couple of clips for you. The first one is Kraken, kind of talking about how far we're behind. Listen.
Do you think this is the year that we catch up with jurisdictions with respect to establishing a crypto framework? I'm thinking of MiCA in Europe. How optimistic are you that by the end of this year we'll see some of this legislation get signed into law?
Yeah. In Europe, you see the markets in cryptocurrency assets rule charge ahead. They were light years ahead of us on this, and as a result, we're seeing American companies, American innovators, American entrepreneurs move offshore. Now, we are committed to the US market. Kraken has made that public. But I got to tell you, it's tough to deploy capital here. It's tough to employ people. It's tough to plan for product rollouts without certainty. I don't know how they beat us on this. I kind of do, and I could spend a little bit of time on it, but they beat us on this. That holds, as you can see, jobs, livelihoods in the balance. I know what you can see here. I know what I can see here. I don't know what the cameras can see. But all these people have been pushing and pushing and pushing to have their voices heard. And eventually, that dam breaks.
This is Brad Garlinghouse talking a little bit about this. And he goes into what could be coming down the pipeline. Because if everything lines up here, along with what's happening with Ripple, we could see a stablecoin bill getting approved. In fact, I believe we will. I think FIT 21 is going to get approved, and I think we do get a stablecoin bill approved before the end of this year. And I know there's some people that will assess that differently, but let's go to this clip.
So you're getting into the business of stablecoins. Why now?
I think if you look at where the market is going, well, you're right, it's somewhere between $150 and $200 billion today. I think forecasts are that it's going to be somewhere around $2 trillion to $3 trillion. So that's growth of 10 to 20x where it is today. So that in of itself is those are fun markets to be in, that they're growing quickly. The second is, I think there's likely to be some shifts in market share. Today, Tether is by far the dominant. I think the U.S. government is taking the position, well, if you represent a U.S. dollar, you need to be regulated by the United States. That isn't the case today, and I think there may be some shifts in how that market share. But look, overall, I think Tether will continue to grow. I think USDC will continue to grow. But I think there's a lot of room as that market grows for a Ripple-backed stablecoin.
And what does this mean for XRP? Do the two work in tandem, or does the stablecoin supplant XRP's utility?
We think having a stablecoin built on the XRP ledger actually adds liquidity to the XRP ledger. We already have been using stablecoins in our payment flows.
So you can anticipate that Ripple's probably going to have quite a bit of an impact on the use of stablecoins. In fact, we'll see their stablecoin roll out this summer. Ripple switches their U.S. on-demand liquidity, their ODL clients from XRP to USDT. This, of course, was last year's issue. So if this plays out, and we do see the Ripple stablecoin start to play into it, we could see liquidity start from ODL, especially start to shift over to Ripple. Now, with all that being said, is the U.S. ready for such a thing? There's actually an executive order that has been issued already. This was actually issued in 2022, particularly in setting standards that promote democratic values, rule of law, privacy, protection of consumers. All these are good. Investors and businesses, and interoperability with digital platforms, legacy architecture, and international payment system. That means SWIFT. We know that XRP is already working with SWIFT. This, of course, was one of the initiatives that pushed Yellen into working on understanding what was happening here. It also accelerated all of this movement, I think, of where we are seeing right now the acceleration of stablecoins being approved. Simply meaning we could see a fast track here on stablecoins, especially maybe even faster than some of the other bills that are coming out, maybe prior to even when MiCA's deadline hits in June. So a lot could be happening right here in June. Make sure and follow us, of course, to get more of this kind of data and more of these deep dives. If you like these, make sure and smash the like button right now. Let us know down in the comments below. If you're not following me on Twitter, it's just @PaulBaron. We'll catch you next time right here on TechPath.